All right. Hi, everybody. Welcome to another Hot Topics. We have with us now a gentleman by the name of Bradley Beer, who is the owner of BMT Depreciation. So welcome to our video, Brad.
Great to be here, Andrew. Love talking tax depreciations, you know.
That's what you're good at. All right. We just got a couple of questions we'd like to ask you, if you wouldn't mind. I'm forever being asked these questions by my clients. So let's get into it. What is property depreciation and what does it mean for property investors?
Yeah, look, very simple. When you buy an investment property, so not the house you live in, you get to claim a depreciation on the wear and tear of the stuff in that property, basically. A bit like when you buy a car, we understand depreciation, we drive it out, becomes worth heaps less money fairly quickly normally. That's depreciation. Same thing happens in your investment property, except hopefully the actual value of the property goes up, but the value, I guess, on the items in there, the carpet, the stove, the blinds, the bricks and mortar for that matter, do wear out over time, and the tax office allows us to make a tax deduction for that.
Awesome.
What it means for investors is, because it's a tax deduction, it's also a non-cash deduction. You don't pay for it each year. It's just more money. It just reduces the holding cost of properties, or turns it around, so you just get a much bigger tax return, and makes a pretty substantial difference to the cash flow numbers when you're a property investor.
Yep. So why does a quantity surveyor get involved, and doesn't my accountant do it?
Yeah, the reason we get involved, I'm a quantity surveyor. What a quantity surveyor does normally is, estimate the construction cost of buildings, count bricks and find out how much they should cost to put there, and everything else. So how much would a building cost to build? A quantity surveyor is the guy that can help you with that. The reason we do it is the depreciation and the claims relate to the cost of the building and the value of the items, and the accountant doesn't, count and estimate construction costs of buildings. So the tax office accepts the quantity surveyor to do that, and we work alongside accountants, produce reports that provides one of those numbers basically that goes into that whole big tax return.
All right. Is it worth getting a depreciation schedule done for older properties?
Look, most of the time. We hear the myth all the time, it's only for new properties, and new properties do get the most, but secondhand properties definitely get some depreciation. It will depend on the age and a few things as to how much they'll get, but it's always worth asking the question about a secondhand property, if it's a certain age or what works and things have been done to it over time. Secondhand property still definitely gets depreciation.
All right. Does how does it work, like the depreciation work when renovating?
So when you do renovate, if it's an older property, depreciation relates to the cost of the building and the value of things in there. Yep. When someone renovates, you or someone else, you basically add more stuff. So there's more value of things in there, and you get to claim depreciation deductions based on them, regardless of whether that was you or somebody else before you owned it effectively.
All right. And what can an investor do if they've been missing out on depreciation deductions? Can they go back, sort of like back in time, and get any missed deductions?
And this is probably the big exciting one. If you're an existing investor, you can easily go back for up to 2 years and amend tax returns if you haven't been claiming it, or if you even haven't been claiming as much as you can. It's a bit like if you don't pay your tax, the tax office will make you pay it eventually. You can go, oh, I forgot, I didn't know last year. And 2 years of tax returns can be amended easily and potentially get some substantial cash back in your pocket. The average deductions we get out of the properties that we do in the first year, last year, was just under $10,000. So it can mean a substantial amount of money.
All right. And how can the investor find out if getting depreciation schedule, like getting one completed, is worthwhile for them?
They've just got to ask us the questions. With the address of the property, we can see these days the photos and information and when you bought it, what you paid for it, and we'll give an indication. We've done nearly 1 million of them sometimes this year. So we've probably done a similar one. We'll give you an indication before you go ahead and do anything. Just make sure there's enough value in there to be worth it.
Look, I'll vouch for that. You guys have really helped me with my own portfolio, and I've always found your people to be very honest. And if they felt that it was worthwhile, we've gone ahead with them. And if ever, for whatever reason, not, you guys have always been upfront. So I really like that, really do.
We actually attach a guarantee to the back of that says if we say it's worth it and go ahead, then we go ahead and we start doing the work and we're wrong, it's double the fee or you don't pay anything. So
awesome.
We don't get twice as much as we cost in the first year as a deduction. We call you and say, walk away,
geez.
nothing to pay, basically.
All right. And what is involved in preparing a property depreciation schedule?
Yeah, but people, very interested in what we do. We actually go, we visit the property. Very important part of the process that we make sure we go out, identify what's there, take enough information to make sure we can estimate all those costs and values, get that together, pull this depreciation report together, do our estimates in the background, and put together a report that tells your accountant exactly how much to claim each year and maximize it as well while we're at it. Find everything, get as much as we can so you get better tax returns.
All right. The last one, your phone's going to ring hot now because we've got a lot of clients you've helped, but a lot that I'm sure your company can assist. How do they get a hold of you guys?
Simple, 1300 728 726 or website bmtqs.com.au. Find us in all those, and also much more information in detail about certain things, case studies, all sorts of things there in newsletters, etc. that you can go and find and just really learn a bit more if you need to, or just talk to us.
All right. Well, what we'll do is we'll put all your contact details in the description as well, and for your company. And thank you very, very much for coming on board. And it's always been a pleasure dealing with you guys.
Thanks, Andrew. Much appreciated.
Take care. Thanks for your time. Thank you.